Now, while I was working, Mr. Big Short himself, Steve Eisman, came on, right? The man got very famous from obviously a very famous movie being made about him, right? The Big Short. And it's interesting, right? Because basically this man starts out the conversation by saying he underestimated how underinvested, fund managers were. Big money, basically, is the best way to put it, okay? He underestimated how underinvested big money was. And, the market's going obviously very bullish. And I'll be honest, the man didn't sound bearish, which is scary. I mean, this guy, he's usually always sounds bearish. He didn't even sound bearish. You watch that clip and it's like, for the guy that's, known for the Big Short, he didn't sound bearish at all. He actually even talked about being long. If I recall, he even talked about being long some tech stocks. Holy smokes, that's no dang jokas, right? And so I'm just watching that clip and I'm just like, wow, this is an interesting moment for the market that we're in, right? And, I was even watching Mav's video last night. Mav was even talking about, you got to be long some of the value plays and whatnot. And so I'm like, we're at a very interesting moment in the market now at this point in time. Very, very interesting, right? Now, let's speak about something, right? Selling some of these stocks to take some profits. The first question you got to ask yourself is, where does the money go? Where does the money go? Because if you're going to, let's say you're like, I want to take some profits in Tesla, right? Okay, where are you going to put that money? Is that money going to be in a better place for the next 3 years than Tesla stock, right? Because you really need to be thinking, you don't think about the next 3 weeks or 3 months. Why don't you think about the next 3 weeks or 3 months with Tesla or Meta or any of these other stocks, Nvidia, Amazon, whatever? The reason is because you don't know how to time the market. I don't know how to time the market. I've been doing this for 15 years. Every day of my life revolves pretty much around the stock market, right? I don't know how to time the market. Big Short man doesn't know how to time the market. No one knows how to time the market, okay? And so to say maybe over the next 3 weeks or 3 months or 3 days, I could sell Tesla, buy it back cheaper, that's a fool's game. You can do that. It's a gambling decision. Just understand you're making a gambling decision. You're not making an investment decision. You're making a straight up gambling decision, okay? No different than, obviously, I live in Vegas, going down to the casino and playing craps or whatever. That's a gambling decision, okay? So if you're going to sell something, let's say you think the valuation's way too high, maybe you just don't like it anymore, you're like, I don't think I really like this investment. You got to ask yourself, where the heck's the money going to go? Because too many times people sell out of things and they don't know where the money's going to go. For instance, I'm thinking about selling a stock, and we'll speak about that later in the video, but I have a specific place that I'm ready to put the money. Before I've already contemplated this. If I'm going to sell it, where's the money actually going? You need to have that place lined up. If you don't have that place lined up, then what the heck are you even thinking about selling for, okay? If you're holding cash, or if you're going to say, I just want to build cash balance a little bigger here, that's fine. But just make sure you're likely keeping it in a savings account, right? There's a lot of reputable savings accounts, FDIC insured up to $250,000, right, that are paying 4 to 5% right now, okay? Plenty of those options out there right now that are paying 4 to 5%. So if you're going to say, I'm going to sell to hold some cash because I don't have enough cash around, okay, just make sure you're at least getting something on that cash, because the way the market's rolling, the last thing you want to be is collecting nothing while the NASDAQ goes up another 5 or 10% or something like that, right? That's not a fun position to be in, right? Okay. Now, obviously, you're going to have, periods of volatility in this market. You have time periods when things look bad and things look good. At the end of the day, the best advice I can give to folks out there is make decisions out there that you're going to be proud of over the next 2, 3, 4, 5 years. If you're buying a stock, make sure it's a stock that you're going to be proud of, that you're a shareholder of, long into the future. And, don't make any decisions that are just based upon short-term things. When I made my decisions today, such as around, Corsair, such as around Disney, right? And, those are long-term decisions because I believe there's better places for the next several years for my money, right? I believe Target's an easier risk-reward profile than Disney over the next 3 years. I believe PayPal's an easier risk-reward profile than Corsair for the next 3 to 5 years, right? And so I want to allocate more capital there than something like Corsair. So whenever you're thinking about these things, make sure you're thinking about the next 2, 3, 4, 5 years and not the next 2 to 5 weeks. Because the next 2 to 5 weeks, anything can happen. Some big news can happen with this stock or that stock, and it moves up huge or down huge. Don't let that get in the way of your long-term focus and where you're trying to build your portfolio and building a portfolio you're going to be proud of for years to go in the future. When I look at the public account, very proud of what we've been able to build there. As a portfolio I started well, a little over 5 years ago, probably 5, 6 years ago, right? And now it's a $1.8 million plus portfolio. I think eventually it's going to become a $3 million portfolio and a $5 million portfolio. And someday in the future, it will be a $10 million portfolio. But all the decisions in there are long term. Not all of them are going to be correct. Sometimes I'm going to screw up. Sometimes I'm going to make a mistake. Sometimes I'm going to buy a stock that didn't work out and it's going to go really bad. And I'm okay with that because in this game, you're going to make some mistakes. But always focusing on the long term, and the rest of this game is going to be what it's going to be. Okay, so this next company, it's a mess, and that is Disney. Disney, a less than $1,000 position I had in the dividend portfolio, which is another portfolio you get full access to when you're a member of the private group, right? And this was one of those that it was like I started this little teeny position here. I own I think 9 shares. And I thought maybe I would just buy this stock for a while, as in 6 months, 12 months, I'll just continue to buy shares. But the more time ticked on and the more I kind of thought about Disney, the more I was like, this is not a stock I want to be part of. This is a mess, an absolute mess of a company. I mean, the amount of issues on Disney's plate right now is, I don't even know where to start. I mean, their parks are reporting disappointing traffic when, travel's booming right now. They should not have disappointing traffic in their parks. And that's the best part of their business. From there, it just gets much worse, right? The streaming, they're still losing a fortune when it comes to that, right? ESPN's a mess. They just fired a ton of people at ESPN, big name people, because ESPN's profitability just isn't quite there, right? Linear TV in general has just been kind of a drag for them. Obviously, there's a massive shift in the overall cable landscape, and some people just not having cable, or then they're switching to streamers such as YouTube TV, such as Fubo. That's a whole disruption that's going on. Bob Iger sounds like he wants to sell off the ABC business. So what does that mean going forward? The company has a lot of debt. They have the DeSantis thing. I mean, my gosh, there's so much with Disney that I'm just like, I don't want to go through all that crap. It's too freaking much. There's way too many opportunities out here in this market to be screwing around with Disney. And so could Disney be a moneymaker over the next few years? Sure. I just don't want to be part of that mess. There's way more opportunities in this market that I could probably make a lot more money, not have to take nearly as big a risk, and not have to go through the headache that is going to be years of restructuring and trying to get that business right. Things are not going to be fixed in a quarter. I told you guys going in, Bob Iger is going to be there for a lot longer than he was thinking. He was thinking 2024 and he'd be out. Now all of a sudden they're talking about Bob Iger is going to be here until at least 2026. The reason that's going on is because he's realized this is a freaking mess, and this is going to take years to clean this up. And the board of directors says, okay, we'll give you the next few years, because he can't even hand that company off to somebody right now. Literally, it's too messy. And so that's what's going on with Disney. Now, in terms of where I put the Disney money, I put the Disney money into another stock that's a little messy right now, but the difference is this stock's problems can be fixed in a matter of a couple quarters, not like a Disney where it's going to take years. And that stock is Target. Target is a position I'm building. I want to continue to build this one in the dividend-only portfolio. So once again, the dividend portfolio has about $170,000 in it or so. It's only dividend stocks can be in there, and Target's a stock that I want to build into at least a 5-figure position in that portfolio, maybe $20,000, $25,000 over time in terms of what I really want with Target. We're looking at a company here that trades based upon, so their fiscal year ends in January, so it's kind of a weird time to end your fiscal year instead of December. But basically, based upon 2024 numbers, we're trading at about a 13 forward P on the stock. If you want to say, oh, maybe they'll be a little less profitable than analysts expect, okay, so maybe they're trading at a 15 forward P. If you want to say they're going to be a little more profitable than what analysts are expecting, then maybe they're trading at 11 or a 12 forward P. I feel very comfortable. I'm going to sleep very well at night holding a stock like Target, and I want to continue to build out that position much bigger over this next, we can call it, I don't know, maybe 3 to 6 months, maybe 9 months. We'll see kind of what goes on there. And Target's one of those easy buy the dip opportunities for me where even if there was a recession, I'd feel comfortable buying it. Really regardless, I feel comfortable kind of buying that stock and kind of loading up there.